items. So we're on Zoom. We have everyone muted because there's a good few dozen people on today's webinar. So we've got everyone muted, but we really want you to ask questions as we go along. So please feel free just to ask questions. You can type them into the chat window or use the Q&A pod. If you've used Zoom before, it's a very standard layout. So just go to the chat window, type in your questions. I'll be happy to pick them up and answer them as we go along. And I'll also stick around afterwards. We aim to finish within half an hour. So by 2:30 p.m. Eastern, 7:30 p.m. GMT. But I will keep the line open, or I'll keep the webinar open if there are questions, just to make sure that we cover off everyone's questions. Standard risk disclaimer. Today is really about educational purposes. We're not giving investment advice or any kind of financial advice. And remember, this is the financial markets. It is the Forex markets. It's a leveraged instrument. So please mind your risk and don't trade money that you cannot afford to lose. So my name is Huzefa Hamid. I'm one of the senior analysts at DailyForex.com. I'm primarily a Forex trader even. I trade mainly the majors, the 7 or 8 majors, things like the Euro USD, GBP USD, USD CAD, USD Swiss franc, Aussie dollar, New Zealand dollar. And I trade a few crosses now and again, Euro CAD, Euro pound, Euro yen, etc. So that's the bulk of my trading. And I trade a couple of futures contracts, crude oil futures, and the S&P 500 futures contract. For my trading today, I use mainly technical analysis to make my decisions. So I'm really just looking at the price chart. I use very few indicators. Most of my trading is without any indicators at all. And you're going to see an example of an actual trade I did, so you get an idea of what my screen looks like when I trade. I do look at the economic calendar to see when news announcements are coming out, to just get an idea of what currency pair might move this week or this month and so on. But I don't actually look at the numbers that are released. I'm not looking at, say, the interest rate announcement and saying, okay, what was the interest rate announcement? What was it last year or last month? How does that compare and things like that? That's not what I'm using the economic calendar for. I'm simply using it to see what will drive the markets. And I'm based in Toronto, Canada. We're in the middle of a lockdown. I'm sure many of you are in the middle of a lockdown too. But if you're in this part of the world, or if you're ever in town in my city or my province, feel free to look me up. Be really happy to have a coffee if it's safe and if it's something we can do. I'm always curious to know where people are from. So if you have a second, go to your chat window on Zoom and just type in the city or the country you're in. It'd be really nice to know where everyone is and just get a handle on just the audience I'm talking to. Somebody's from Nisha from London. Maybe you mean London, England, Florida, Nigeria, New York City, Carolina Beach, NC, that's North Carolina, I believe. Houston, Texas, I've got a really good friend in Houston, Texas. Kenya, the person from Kenya, big shout out. My parents grew up in Kenya. I've been dozens of times to see my grandparents. People in Jordan, Texas, in North Carolina and Texas have got warmer weather than I do right now, so I'm very envious. Hey, Paul from Kingston. Barcelona. Abdul Salam, nice to meet you. Thank you. Thank you for doing that. I really appreciate it. All right. So today, breakout trading. What's breakout trading about? Breakout trading is really a style of trading where you're looking for the price to break out, as the title suggests. So let's start by defining the terms. The first thing we're going to do in this presentation is we're going to do a bunch of theory. We're going to look at exactly what breakouts are, how we define them, what constitutes a breakout, and so on. And then the second part, we're going to look at a live trade of a breakout and just and look at the anatomy of that, look at the sequences that got me into the trade and got me out of the trade and so on. So you get an idea of, okay, this is the theory. How do we apply that in practice? Does it actually work? How difficult or easy is it? And so on. Okay, so the first thing I want to talk about is breaking out through a key level. When I use the term key level, I'm talking about a support or resistance level. So for example, the market will go up and down. Very often it will make a key level, such as here, and then eventually it will break through it. So that's the idea of a key level. Now, when we're looking at key levels for trading, and particularly for breakout trading, what I really want to emphasize is that if this level has multiple touches, so in this diagram, this has got 2 touches. So sometimes it'll have 2 or 3 touches. Sometimes it might just be a key level made with just 1 candle, so it'll have a single touch. But certainly if it's got multiple touches, we want to look at 2 things. We want that level preferably to be as horizontal as possible. So we're talking about it being flat as opposed to like a trend line up or down. We want a horizontal or a flat level. And secondly, we want that level to be neat. So what do I mean by neat? Well, in this case, it's a diagram, so it's very neat, but very often, you have a bunch of candles here, and then you have a bunch of candles there, and a level that is not neat will have candles moving up and down through that level a lot. It won't be in a kind of tight area where it will touch that neatly. So we prefer levels that are neat and prefer levels that are flat or horizontal. So that's when we're looking at breakouts through levels, we're looking at support or resistance. In this case, the diagrams are resistance, flat levels, and nice and neat levels. The other type of breakout that we want to consider is breakout from a consolidation pattern or a range where the range becomes tighter over time. So it looks like something like this, a triangle, essentially. Now, each one of these triangles has a name. So if you've studied technical analysis through books or courses or anything like that, or you've gone to our fxacademy.net, I believe, site, you'll see definitions of triangles and so on, Investopedia and things like that. So they have names such as symmetrical triangle, ascending triangle, descending triangle. I'm not too concerned for breakout trading what type of a triangle it is. So whether it's symmetrical, whether it's ascending or descending, the point is making a consolidation or a tighter range or a triangle. So spotting breakouts, like how do we go about figuring out if a breakout might happen on a pair? So the first thing I like to look at is the news events and economic calendar. Typically when you have news and events, the major ones anyway, such as interest rate announcements, anything from a central bank of a certain country, the Fed Reserve, the Bank of England, the European Central Bank, the ECB, and so on, any of the or employment figures, etc. It's kind of high impact news events, or high impact events. High impact announcements on the economic calendar will often drive breakouts, and any news events as well outside any kind of geopolitical events. War announcements obviously it's 2020 and the big news event this entire, or 2 big news events really this entire year have been the unfolding of coronavirus or COVID, and secondly the US presidential election. But very often those kinds of events will drive breakouts. And secondly, when the price starts to consolidate near a key level or in a tight range, anytime you see price coming to support or resistance and it starts to narrow down in range, at some point it's going to break out. So you can start, keeping an eye on that chart, flagging that chart, however you do it, writing it down on a post-it note to remember to look at it once or twice a day, etc., to see if it'll eventually break out. So if you've never used an economic calendar before, this is a screenshot of Forex Factory. I took the screenshot this morning. So this is the current calendar. One of the things I like about Forex Factory, it's just forexfactory.com, is that it will give a color for the different types of announcements. So for example, yellow means low impact, orange means medium impact, and red means high impact. So I typically look at the orange and red events. There aren't too many this next couple of days or this week. It's Christmas week or the holiday season. So there's not much going on, and it's post-US election now. The news cycle around that is beginning to die down. But so this morning, for example, with a USD announcement, a GDP number, quarterly gross domestic product number. Tomorrow morning, there's a GDP announcement from probably the Bank of Canada or the federal or the Canadian government. Tomorrow at 8:30. So, for example, this week I'll be looking at any of the majors because of the USD announcement, and specifically USD CAD or Euro CAD or one of the CAD crosses for breakouts. Now, some breakouts happen with trend. So with trend means, so in this case, the trend is going up. You can see the price is coming up. It's starting to consolidate, and eventually the price will break out. So that's a with trend breakout. Now, of course, you can have an against trend breakout where instead of going with the trend, the breakout happens against the trend and goes in the other direction. With trend breakouts are considered safer because you're going with the current flow of the market, and also most breakouts generally happen in the same direction of the trend. You can't preempt it because, of course, it could just go against you. So you have to wait for some confirming factors, which we're going to look at. So the first thing I want to talk about is specifically a breakout candle. So what are the features of a breakout candle? There's three key features I want to talk to you about. Okay, so firstly, a breakout candle, it's long, covers a lot of price action relative to the previous candles. So what's the definition? What's the definition of long? Is it 20 pips, 50 pips? It really depends on the time frame you're looking at. 50 pips on a hourly candle is really long. It's nothing on a daily candle. It's nothing on a weekly candle. So it really depends on, but it's relative to the previous candles. Firstly, you want the breakout candle to be long. Secondly, you want the candle to have short wicks. And the reason is if it's got short wicks, so these are the top end of the candle, above and below the open and close of the candle. If those wicks are short relative to the body of the candle, it means that candle is decisive. I used to have a rule. I don't keep this as a fixed rule anymore, but I used to have a rule that the wicks, the total length of the wicks on both sides added up together, shouldn't be more than a third of the entire length of the candle. I would actually have a spreadsheet where I could measure it. I'm not that rigid anymore in my trading, but you could use a third if you want to eyeball it. It's just as a point of reference. And thirdly, you want the candle as a breakout candle to close above or below the key level that you're looking at. So if it's a resistance level, you want the candle to close above that resistance level or below if you're looking at a support level. Or if it's a pattern or a range, you want it to close outside of that range. Okay, so that's a breakout candle. So what happens post breakout? So let's say you've seen a breakout candle. We're going to look at all of this in an example shortly. So what happens post breakout? So the first thing I want to talk about is just a support or resistance retest. Now, I'm going to summarize it here, and I'm going to tell you where you can get more information as well. So here you've got a breakout. I've just drawn one of the touches. The price will then retest, will pull back, and then retest that previous resistance now as a support. So that's called a role reversal. Resistance now has become support. If it's going the other way, support then becomes resistance. So that's the idea. So post the breakout candle, the easiest way is you don't want to just jump in. The price it could be a false break. I could just go against you. You really want to wait to retest the area from the other side. Now, of course, sometimes it doesn't pull back much. It just keeps going, and you do it on occasions. You do miss the trade because of that. But in terms of preserving your capital, having the safest trades, you really want to wait for that, some kind of a retest or a confirmation. I've mentioned FX Academy a bunch of times. So I'm just going to put the link in the chat window so you all know where to find it. Okay, the second way to measure an entry for after the breakout, post just means after, post breakout, is wait for a Fibonacci retest. And the levels that I like to look at is waiting for the price to go back somewhere, either touches or goes back in between the 50% level and the 61.8% level. The 61.8% level is the main Fibonacci ratio. It's known as the golden ratio. And so again, in the diagram, here's the breakout first. So it's moved up, touched the resistance, retraced a little bit, and then broken out. Then it retraces a little bit. And then now this is where we would draw our Fibonacci level. So we can see the low, high to low, 0 to 100%. And in this case, the price is then sitting at just below the 50%. So sitting in this, what I call the buy or the entry zone between 50 and 61.8%. And then you want to see price, preferably on the lower time frame, which we're going to get into, bounce against that level, somewhere in between that level, either touches the 50% clean or sits somewhere between the 50 and 61.8%, and then eventually just continue moving up once you've hopefully had the chance to enter the trade. On the third way to measure the effectiveness of a breakout after the breakout is you want to see a small consolidation in price after the breakout. So if you've got a bullish breakout, got a big bullish candle, you want to see the prices consolidate up there. I haven't drawn individual candles, but consolidate, and then you could get into that consolidation. Those are the three ways. So to summarize again, you could wait for a support resistance role reversal or retest, hitting a key Fibonacci level between the 50 and 61.8%, or waiting for, or if the price makes a small consolidation. In other words, it doesn't snap back. That's the key difference. Okay. And when you're looking at breakouts, you want to use multiple time frames. So typically with time frames, I consider these the higher time frames: weekly, daily, and 4 hours. So that's really where I'm looking for my breakouts. And then most traders, myself included, will draw an imaginary line, and they consider anything below the 4 hour, so the 1 hour, the 15-minute, and the 5-minute. I can consider that to be the lower time frames. So I will do my analysis on the weekly, daily, and 4 hour, and I'll do my execution on the 1 hour, 15-minute, and 5-minute. Okay, so that's a theory around breakouts. So let's look at some chart examples moving on from that. So this is a trade I took. This is the dollar CAD, USD CAD. This is the 4 hour chart. So near the top, the price was trending up. So near the top, it made a key level right here. So I've marked the key level. I noticed it when there's a big long retracement. Typically, the market has been trending up. It's going to new highs, and it made a big drop in a single candle. And this is where the prices really reacted. And then it came up here and here. There are 3, 4 multiple touches. So hopefully everyone can see my mouse. Here's a key level with a yellow arrow, and there's a couple of multiple touches here, 3 and 4. 1, 2, 3, 4. Now, now you can see obviously in this diagram, you can see what happens next. You can see the price breaks down. My expectation in a real environment was that the price would actually break up. So I was waiting for a breakout candle, a bullish one, to go above this level, come and retest this level, and continue. So I was expecting to buy the dollar CAD. Now, a breakout candle also notice that the price was consolidating. So not only was there a key level, there's also a consolidation. So you can see an ascending triangle here. So you can see a nice little ascending triangle. I know on my chart at the time, I also marked this low here as a key level as well. So I'll just go back. Here's your key level. Here's the ascending triangle or the consolidation. But I marked it a flat level here, just one touch that I want as a key level. My last support is my key level 2. So to my surprise, a breakout candle that wasn't surprising. I was expecting a breakout candle to appear. You might have seen a few smaller candles instead, but I was expecting the candle to appear. There's a news announcement around this time. This is around beginning of October or late September rather, this year. A breakout candle did appear. The surprise was that it was bearish for me, and it closed below my last support. Okay, so then it continued moving down. You had a small consolidation kind of here, but importantly, it came back up and it retested this key level now as support. Now, to get into this trade, I didn't just stay at the 4 hour chart. I moved down a time frame. So I went down to the 15 minutes. I skipped the 1 hour. I went straight down to the 15-minute. And 15 minutes for me, it's a good execution time frame. It's not enough. It's enough detail for me to get tight entries, but not so much noise. I occasionally look at the 5-minute. I can't remember the last time I cared for the 1-minute chart or anything like that. So this is the first. I'm just going to go back. This is these purple rectangles rather. when I zoom, this is just me now zooming, same rectangle, same price area, just zooming in to the 5-minute charts. It's come up and you can see it's making a real stab at it. First stab, here in the live market, I'm wanting to see what happens. It goes back down. Now here I've got like 2 touches, by this point, I should be quite confident of the trade. So I'd actually entered, I think around here before the 3rd touch, and I got a nice tight entry. My stop was around here, and then it went down. Initially I got a 1-to-1. I took a 1-to-1. I took partial profits. 1-to-1 simply means I got 1 unit of risk against my stop loss. If whatever I don't remember my stop loss for this trade, but I took the same pip level for my for my first target as the size of my stop loss, or my target was the same size as my stop loss, and I took half my position out and I rode the rest. Now it went back up to retest it. I was still in this trade. I didn't get stopped out. I was really close to getting stopped out. I would have broken even if I did get stopped out because I've taken partial profits here. It really jumped up and then it snapped back down. So it made a run for that level, but it didn't want to sit around there. It just made, and these candles are 15 minutes each. So in a matter of less than an hour, it just snapped back down. Now, at the time, I wasn't actually at the screen. This is quite early. This is quite early in the day for me. So I woke up and I saw this, thankfully. But there you go. And then the price ended up moving down. So I'm going to go back. This is the second test, and then the price moved down. And I'm going to show you where I took my target in a second when I bring my fib levels up. Somebody is asking me which broker do I use. So right now, my main broker here, it depends on where you are and where you want to be regulated. I've lived in England. I've lived in, I now live in Toronto, Canada. So I use AvaTrade as my main broker. I'll send a link in a second. And the other one I've used and still got an account with is a company called FX TM. So in a couple of minutes, I'll send a link out. Okay. Now going back just to the simplified charts, this is the same chart, USD CAD, key level. So I'm going to show you how you could apply Fibonacci. Now, this is the high I used, and this is the low. So this is the 0%. I've removed the 0% line for clarity, and this is the 100% line, which I've removed for clarity as well. So here you can see this is the 50% here. So it came up, it kind of sat in reverse nicely between the 50% and the 61.8%. Now, coincidentally, in this chart, this is a really great, what's known as a confluence. A confluence is when there's like 2 or 3 factors that come into play to confirm the trade. And the confluence in this case is that the fib level lined up with the key level 2. I removed key level 2 just from this chart because so you can see everything. But key level 2 kind of lined up with that 50% level. So it was a really good confluence for me to stay in the trade. Now, if you'll see on the chart below, a minus 23.6 and minus 0.618. So minus 23.6% and minus 61.8%. So those are my first and second targets. Or I take out 1-to-1, half my position, and then the remainder I take out summit. In this case, I actually took it all out at minus 23.6%. And if I have any of the remainder position, I can go for the second target. It hit second target in this case, but I was out here. I had a really nice stop. So this is a kind of a high reward to risk trade. I did take out half my position around here at 1-to-1, and I rode the rest. And these are 4-hour charts. So this is actually, so interestingly, I got my 1-to-1 immediately. So I was in what's called risk-free. I've taken out half my position at 1 unit of risk. So I'm in a risk-free trade now. So if I get stopped out in the remainder of the position, I'll break even. But it took me days, almost like a couple of weeks, to get the remainder of the target. Move down, then move back up. I was pretty sure. I tend to leave my trades alone now. Once it's done, it's done. And if I get stopped out, I get stopped out. I don't adjust. But I eventually got my second target, and then I was out of the trade. So hopefully that shows you, that demonstrates just the theory that we talked about at the beginning of the webinar. A final note: we're coming up to 2:30 p.m. Eastern time. So final note: There's a type of pattern called wedges. So unlike triangles, wedges have both angles sloped. So a triangle will have usually one, or it's much more flat, maybe an ascending or descending, but one of the lines will be flat in a triangle. But a wedge is when you have you still have a contraction of price, but it's moving. It's you have it both lines at an angle. So here you've got a falling wedge and a rising wedge. Now the idea of the falling and a rising wedge is they're unidirectional patterns. They usually, so if you've got a falling wedge, you're usually expecting a bullish breakout. And with a rising wedge, you're expecting a falling breakout. So it's a little bit contra against conventional wisdom. You think a falling wedge will just go lower, but the idea of the falling wedge, etc. Now, with wedges, when I see a wedge, I tend to just get in on the breakout. I don't wait for a retracement or anything like that. I don't wait for the 50% level or the support resistance level. I just get in. And this is an example on gold. So this is the daily candle on gold. This is going back in 2019 and 2020. But you can see two wedges. This is quite a narrow, this wedge isn't that prominent, but when it eventually broke out, it just moved. There's no real big retrace here. And same with this big wedge that was made in 2020, kind of between 2019 and early 2020, but it just broke out massively and just kept moving up. And this is when COVID kind of just kicked in April. Massive volatility around gold. Again, being asked a question, would you please tell us for daily 4 hour and 15 minute, what's the approximate pip value for breakout candles? So 15-minute, I wouldn't use a breakout candle. 15 minutes where I would time my trade, but if I were to do it, it'd probably be about 25, 30 pips. 4 hour and daily, anything about 50 pips, 75 pips to 125 pips sometimes for the daily candles. It depends what's happened before as well, what the size of the candles were before. It depends on the pair as well, the currency pair. And 15 minutes, maybe 20 to 30 pips. 4 hour, 50 pips maybe. At daily, you can go post 100 pips. Actually, just to answer that question better, I'm going to go back and we'll look at the breakout candle. So what's really important, so if you look at this breakout candle within the CAD, there you go, that's clear. This breakout candle, you can see this is one candle has taken out dozens of candles of price action. So that's really where you can tell it's a breakout candle. It's not as strict as a rule in terms of pip value. So this one candle it's been consolidating for about a week, and in a 4 hour candle, it just takes out all of this previous price action. There's a good 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So about 24 candles here it took out. Saze, I hope that, let me know if that answers your question. I hope that answers your question. Just going past, so mind your risk. I don't have time, unfortunately, to talk about risk control, but always use a stop loss and never risk more than you can lose. Always set a percentage of your account for every trade so you don't blow out your account on a single trade. Some final thoughts. If the chart isn't clear, it's fine. Stay away from that. Just stay away from the move on to the chart, or just wait for the chart to become clearer, or look at a different time frame. But essentially, if you're having to really stare at the chart and see if it's a breakout or see if it's a consolidation or a key level, it should be obvious to you. I'm hoping that USD CAD example, at least certainly when I drew the lines, was obvious. Everyone was like, yep, that's a key level, that's a breakout candle, and so on. If you've got any questions or want to interact with me, just email me, huzefa@dailyforex.com. I make sure I answer all my emails. I don't get that many emails actually, so it's pretty easy to answer. So thank you very much for joining me. And Phil is asking me any good trades right now. I'm out of the market until the new year. I'm taking a break. What we will be doing in January, we'll be doing weekly analysis. So just keep posted. Phil, you're probably on the list if you on this webinar, but we'll be doing every couple of weeks. I'll be looking at that week's market and the broker links. Somebody's asked me again, so I'm going to send out the links for AvaTrade, and I'm going to send out FXTM. So you look to see where they're regulated and what. Oops, let me do that again. Oops. Give me one moment. I'll send those links out. Okay. Okay. And yeah, if you just shoot me an email, I'll be happy to talk to you. And there is a poll. Please fill in the poll and just give us your feedback before you exit the room. That'd be very, very helpful. It lets us know what we're doing right, what we're not doing right, and it's good for us to improve the quality of the presentations. Thank you very much. Have a fantastic holiday season, however you're celebrating, and enjoy your week. Take care, everyone. Bye now.